Good afternoon. It's Jeffrey Christian of CPM Group. It's 1 o'clock on Friday, the 20th of December here in New York. Going to sort of wrap up for the year, talk about some of the things that happened. There are a couple other things that I will talk about. I have some notes that I'll refer to because there's a wide range of topics that ought to be discussed. I was going to wrap up 2024 in this year video and focus more on the outlook and the potential developments for 2025 in our first video for 2025. That video will come out on probably Friday, the 3rd of January. Possibly we will wait until this Tuesday, the 7th of January to do that. We're going to take at least a week off here and try to clean up our desks a little bit. I started the year's videos this year with this picture, this slide in the first video of 2024. It's a book on lying in politics. It was a present that I had gotten at Christmas. It's by Hannah Arendt, who wrote the book, The Banality of Evil, on how the Nazis led normal lives even as they were slaughtering people in horrific fashion. Really worth reading both of her books. But I have a couple quotes from this book that I had read over the Christmas break in 2023. No one, as far as I know, has ever counted truthfulness among the political virtues. And the result of a consistent substitution of lies for factual truth is the sense by which we take our bearings in the real world. The consistent and total substitution of lies for factual truths. That's what we've seen so far this year, and believe me, it's going to be much more intense next year. I also had this slide in there talking about the spectrum from truth, factual truth. Hey, there's irrefutable evidence that this is happening. The sun came up today. Rational truth, which is the sun will come up tomorrow because it has come up every day for the last billions of years, or at least 6,000 years. Truth by degrees. You know, the census where you count things and say there are 4,000 holes in Hertfordshire. Or you can do a survey and you can guess that based on a survey of parts of that province, you could say there's likely to be approximately 4,000 holes there. You can make estimates, you can eyesight it, and you can make informed guesses. Having been in the precious metals for a certain period of time, having seen that silver will sometimes spike to $50 an ounce, maybe for 5 minutes like in 1980, maybe for 20 minutes as in 2011, but that the monthly and average price will be much lower and that the price will likely fall sharply. It went from $50 in January of 1980 to $16 in April of that year. It went from $50 at the end of April 2011 to $32 a week later. Having seen that, I have an informed opinion. Yes, silver can spike up to $50. Probably isn't going to stay there, however. Informed not only by the history of silver prices, but also by the knowledge of the price effects on mine production, secondary recovery, investment demand, and fabrication demand. When you see the price up that high, a lot of investors take profits. A lot of fabricators cut back on their silver use. A lot of jewelry consumers stop buying, and a lot of scrap comes into the market. In both of those periods of time, the refining outturn, here's my scrap, please refine it into good delivery silver, went from maybe 2 weeks to as much as 6 months. Typically more like 2 months. Informed opinions say, hey, this is likely. And then there's falsehood by degrees. And I think a really good New Year's resolution for investors would be, I will stop listening to these people who have told me that gold and silver are going to rise enormously, imminently. Silver's going to be $100 any minute now. You've got 5 days to buy your gold before the world collapses. Do yourself a favor and stop listening to them. So wrapping up 2024, there's a false narrative out there that the stock market, gold and silver all fell over the past 8 days because of a reduction in market concerns about the state of the world. That's not true. They fell because the market finally accepted the fact that what the Fed has been talking about, which is that it's going to be extremely cautious in lowering interest rates because there are still inflationary pressures and there are a lot of strengths in the U.S. economy. And the Fed came out in its statement this week and said, yeah, the economy is a lot stronger than we had thought it might be. And inflation's a lot more persistent than we thought it might be. So we're probably going to cut interest rates fewer times and less in 2025 than we had thought might be possible. And they warned us all, but the market consensus had hopes instead of knowledge. There has been a reduction in risks, specifically in the Middle East, but across most economic and political risks, the world is in worse shape than it was at the beginning of this year. Now, there are a couple factors that I was going to wait to talk about in the beginning of 2025, what we expect in 2025, but there are a couple factors that won't wait and should be discussed now. One is the potential of a government shutdown and what it would mean in terms of economic activity as well as political powers. That's occurring now. I'll show you some numbers in a little while about that. And the other one is the potential in the next 30 days of a much more powerful Israeli military attack or strike on Iranian military assets within Iran. Quite possible within the next 30 days, or to put it in a way that you might understand better, between now and January 20th. To some extent, Syria, Iran has suffered a lot of losses with its surrogate military forces and is in a weakened state. And the dynamics of what might happen between Israeli and U.S. politics are such that you might see something like that between now and the next time I make a video. It's just something to pay attention to. Some of the things that didn't happen, it did happen in 2024. Well, gold prices rose, set several new records. Silver prices rose and are very strong by a historical standard. Silver prices actually rose more from the beginning of the year to the end of the year than did gold. A week ago, before the sell-off, silver was up 32% and gold was up 20-some odd percent. The dollar didn't collapse. Overseas buyers actually increased the pace in which they were buying U.S. treasuries. They weren't dumping the dollar. They weren't dumping treasuries. They were at a 15% annual rate of increase over the last 12 months. Investors are buying the dollar, they're buying treasuries, and they're buying gold and silver. And they're buying all of those because they're more concerned about the economic and political environment than they have been in the past. Those are the least risky assets in the minds of most investors, and those are the assets that they run to when they're concerned about the state of the world. The BRICS, meanwhile, did not even mention gold or currencies, or let alone a BRICS currency at their summit in their final communique. They did mention it. The head of the Central Bank of Russia said, we at the Central Bank of Russia have no interest in a BRICS currency at all, let alone a gold-backed currency. Mr. Putin mentioned it and had a little mock-up that he had somebody in the Kremlin make. And he pointed out this is a Kremlin mock-up. The BRICS didn't mention gold, didn't mention currencies. They did, in their final communique, call for a more balanced global financial system centered on the IMF. They're not looking to compete with the IMF. They're looking to make the IMF more responsible. So some good things happened, some bad things didn't happen. You are now facing a risk of a more severe recession sooner because of political and economic developments in 2024. On the positive side, one of the reasons why you might see a recession sooner rather than later is because economic activity has been stronger this year. And usually when you fall into a recession, more often than not, it's from a position of strength. The economy is strong and then it goes into a recession rather than sliding into a recession. Now, if the incoming government were to succeed in slashing $200 billion from government spending and laying off more than 100,000 government employees, that would reduce the U.S. economic activity by 7%. $200 billion of government spending, or $200 billion of any spending, is 7% of the $29 trillion U.S. economy. That's par in line with all of those steep recessions that you see in this chart over the last several years. It also would raise unemployment payouts and cause a sharp increase in the budget deficits because you have all those unemployed government workers. And it would throw the whole world into a deeper recession. That's one of the risks we're facing next year. I wouldn't say it's an unintended consequence. I started to call this penny wise, penny foolish, but what's happening is even worse. When Congress shuts down the government, and then it reopens it ultimately, it repays all of those foregone wages, and all of the expenses that it should have been paying while it was shut down get paid, in many cases with interest. It increases the government spending. It's more expensive to shut down the government than not to shut it down. The Congressional Budget Office thinks that the 2018-2019 government shutdown cost the government $11 billion extra, in addition to compensation for all of those bills that went unpaid and wages that went unpaid, another $11 billion. It's also estimated that the 2013 full government shutdown reduced GDP growth by 20 billion. See, shutting down the government has its consequences, and they're not all good. But it's even worse than that. See, the continuing resolution that failed to pass in the House Thursday because Elon Musk said, don't pass that bill, had this provision criminalizing the publication of non-consensual, intimate visual depictions, revenge porn, and deepfake pornography, and required social media platforms to have procedures in place to remove that kind of revenge porn and other types of pornography. And Mr. Musk doesn't want to do that. So he told Congress, don't pass that bill. They came up with a separate bill which failed. And there's a third bill which is being discussed as we record this on Friday afternoon, which is a lot like the first one, but this passage is missing. Be interesting to see if Mr. Musk balks about that one. One of the things I didn't do this year is in our February 20th video, I discussed the 6 critical questions that institutional investors sometimes say, if I'm going to add commodities to my diversified portfolio, answer these 6 questions and let me evaluate it from a position of informed knowledge. And I was going to do 6 different videos over the course of the year about each of these. But the exigencies of the market prohibited me from doing that. Every week when it came time to do a video, I said, well, I would talk about one of these topics, but there are more current important things to talk about. So I apologize for not getting to those, although when I look back at them, a lot of them have to do with commodities investments as opposed to gold and silver. But we do all commodities research as opposed to, in addition to precious metals research. That's all I have right now. I know some people will say, "No, you have to tell me what should I think about precious metals over the next week or two." That's not the job of these videos, but I'm not going to do it. I will say, as I said earlier, precious metals, gold, silver, platinum, palladium, copper, other commodities fell in line with the equity markets over the last 8 trading days. We think that the equity markets got it right. They were looking at an economy that was weaker, that would allow the Fed to lower interest rates. And the Fed said, no, the economy is stronger, inflation is stronger. We really have to worry about this. And I think that the precious metals markets got it wrong. They fell in line, and commodities fell in line with equities where they probably shouldn't have. Just looking ahead, look, inflation is rearing its ugly head again. We have stronger economic conditions. We have political dysfunctionality, not only in the United States, but in a number of other countries. We have the potential of a shutdown. We have a potential of events in the Middle East. And I have to say that I think that if Israel did mount a significant strike on Iranian military assets within Iran, it would not necessarily push gold and silver prices higher. That may be seen as a reduction of risks and tensions and uncertainty. What we do have to worry about is Russia. It's pressing for success within its war against Ukraine now to position itself and to stave itself off from further embarrassing losses before Mr. Trump gets into office. They think that Mr. Trump will pull spending and will push Ukraine to settle for giving up Russia land. Ukraine doesn't want to do that. Ukraine doesn't think it should. I don't think it should. NATO doesn't think it should. But Russia's trying to stave off more Ukrainian successes, both within Ukraine and in the Kursk oblast of Russia between now and the time Mr. Trump comes into office. So you've got a lot of things brewing around. Putting all that together, 2025 looks like it's going to be worse economically and politically, domestically and internationally, than 2024 was. And in that kind of environment, CPM Group stands by its projections that it's been making, which is that investors will buy more gold and silver in 2025 than they did in 2024, when they bought a lot more than they bought in 2023, and that the gold and silver prices will rise over the course of 2025 because of that stronger investment demand. Prices will peak at some point, but we don't think that the peak was 2 weeks ago. That's all I have. Take care of yourself. Have a good year end. We're going to try to take a few days off and a few days to sort of regroup and clear our heads before we start what promises to be a very consequential year in 2025. In the meantime, you can go to our website. There are free reads. You can order our yearbooks or other reports. You can send us an email saying, CPM Group, I'd like to talk to you about ways that you could help. me manage my commodities and precious metals price exposure. Have a good time. Be good to yourself and others. Be good to those around you. Try to do something good for the world. We'll talk to you next year.